Okay, recording has begun. So, introduction to management accounting. I always begin the review session for MAS with introduction to management accounting to give you some proper perspective of what management accounting is all about. Again, management accounting will be 50% of the topics covered in management advisory services. What is management accounting? Management or managerial accounting is the practice of identifying, measuring, analyzing, interpreting, and communicating financial information to managers for the pursuit of an organization's goals. I repeat, managerial accounting is the practice of identifying, measuring, analyzing, interpreting, and communicating financial information to managers for the pursuit of an organization's goals. Now, in order for us to appreciate management accounting, this definition, we should first begin with what management should be doing. Okay? Why? Because at the end of the day, whatever we are going to discuss here in managerial accounting, it is for the purpose of helping managers. The first part of the definition, the first three lines, is simply the definition of accounting. Accounting, it is about identifying, measuring, analyzing, interpreting, communicating financial info. But what makes managerial accounting unique from other accounting is these two words, to managers. It is for the benefit of managers so that the managers would be able to perform its duties properly. Okay? Managerial accounting has a goal. It is for the pursuit of an organization's goals. So the intention of conducting managerial accounting is not to help BIR charge the taxes to the company. It is not to help outsiders like lenders make decisions of how much credit to extend. The intention of managerial accounting is to help managers so that the managers can perform its duties in the pursuit of an organization's goals. Tagalogin ko, ang managerial accounting ay para tulungan yung mga manager gawin yung trabaho nila para magawa ng kumpanya kung ano ang dapat magawa ng kumpanya. Okay? Organization's goals. Para maintindihan natin yung managerial accounting, kailangan natin intindihin muna ang trabaho ng manager. In order for us to appreciate managerial accounting, we need to first appreciate what the functions of management are. The functions of management, meaning the duties of the managers, are as follows. Ang trabaho ng managers, ito, planning, directing, controlling. In all of these activities, decisions will be made. Let me repeat, that's planning, directing, controlling. In all of these activities, there are decisions to be made. Okay? So of all these activities, 1, 2, 3, 4, decision making is not separate from the other three. Decision making will be involved in any of the functions of management. Andyan talaga yung decisions. Okay? What is planning? Planning is all about setting targets and determining the means to achieve the targets. Let me repeat. Planning is about setting the targets and determining the means and ways to achieve the targets. Okay? Saan natin gustong pumunta? At anong gagawin natin para mapuntahan natin yung gusto natin mapuntahan? That's planning. Planning is looking into the future. The manager should be concerned about the future direction of the company, making sure that the resources of the company are enough and that the targets are being met in the future. Planning is all about looking forward, looking into the future. Okay? Directing is running the business on a day-to-day basis. If you have a restaurant, the manager is responsible to make sure that there will be a cook who is going to cook. There will be a waiter who is going to wait, and there will be a cleaner who is going to clean. Of course, right? So the manager is responsible for making sure that the day-to-day business is being conducted. The day-to-day business is being conducted for the company. Controlling, on the other hand, is looking backward. If planning is looking forward, controlling is all about comparing actual results with what we intend it to be. Okay? Planning, you look into the future. Kung beginning of the year ngayon, titingnan mo kung anong gusto mong marating sa year-end. Yun yung planning. Controlling, nandun ka na sa year-end, gusto mong tingnan ano nangyari nung beginning. What were the actual results? From beginning to end. Looking backward. Okay? Compare it with what we planned. Okay? Controlling is about making sure that what is intended is what's really happening. If planning is simply making a decision on what to target and how to do it, controlling is about ensuring that it is going to happen. If it didn't happen, why? What is the difference? What is the difference between expected and the planned result? And how are we going to correct such a thing? Lahat ng mga binanggit ko dito ay mga functions ng manager, ha? Wala pa tayo sa managerial accountant. So the functions of management include planning, directing, and controlling. In these three, decisions are being made. What is decision making? Decision making is choosing among competing alternatives. Decision making is choosing among competing alternatives. You have alternative A, alternative B. Alin ang pipiliin nyo? Si A or si B? Alin ang pipiliin nyo? Si A or si B? That is decision making. So kayo, sino pipiliin nyo? Example, si A, no? Si A, mahirap lang, no? Pero gwapo. Si B, mayaman pero pangit. Okay. Sino pipiliin nyo? Gwapong mahirap or pangit na mayaman? Okay? So that is a decision to be made. Now, in making decisions, some items are relevant and some items are not relevant. Okay? So the managers will be guided by the managerial accountants. Pasok tayo dyan pagdating natin sa relevant costing. Okay? In the meantime, we're going to look at the functions of management: planning, directing, controlling, decision making. Okay? Now, all of these are the functions of management. Whatever managerial accounting is should be something that to support these functions. Whatever we have in managerial accounting, the tools, the techniques, the processes that we are going to tackle in managerial accounting, it should be with the goal of helping managers do their functions. Tulungan ang managers kung paano nila gawin yung trabaho nila. Yun yung managerial accounting. Okay? At this point, okay, my learning the outcome that I would like to happen is that you're able to distinguish what makes managerial accounting unique from other accounting. Because the next step is that we're going to set some differences between the most popular financial accounting. You dedicate most of your time in your undergrad in financial accounting, if I'm not mistaken, and managerial accounting. No? Managerial accounting, hindi naman masyado ito yung focus. Between managerial accounting and tax accounting, I believe you even dedicate more time with tax accounting than managerial accounting. Game tayo. Okay? How are we going to differentiate financial accounting and managerial accounting from each other? Okay? From each other. We'll begin with the users. Users of financial accounting are external from the company, while the users of managerial accounting are internal to the company. Okay? The users of financial accounting, they are outside of the organization. The users of managerial accounting, they are inside the organization. The financial accounting users include investors, the shareholders, the owners. Yung owner ng publicly listed company, outsider yan ha. Kunyari, bumili ka ng shares ng Jollibee. Hindi ka magiging hindi ka magiging part ng management ng Jollibee, no? Bumili ka ng stocks ni Jollibee. Outsider ka pa rin. The owners or stockholders, the lenders, and the trade creditors, they are outside users to be guided by financial accounting info. Managerial accounting information should benefit the internal users, which includes the managers, supervisors, and executives. From then on, I'll just call them managers. So they may be the lower supervisors, the higher ups, the executives, or simply the middle management. I'll just call them managers or internal users. Because of the difference on the users, okay, they have different users. There will be other differences among between financial accounting and managerial accounting. Okay? Si financial accounting para yan sa mga nagpapautang sa company. Si managerial accounting para yan sa mga manager. Okay? Yung info na ginagawa para sa manager. Now, do external users have power over the company? Generally speaking, the outside users, they have no power on the company. But internal users, management has power over the accountants and whoever is preparing the information. So there's a difference between the two. Because of that, we're going to proceed to the next item. As to frequency, financial accounting will only prepare the report every year. Financial statements are prepared annually as a general rule. For some companies, you need to prepare every interim. No? For publicly listed companies, there's an interim requirement. But the general rule is, in under financial accounting, they are going to be presenting their information annually, okay? Every year. Managerial accounting, may kakayahan siyang utusan ang accountant. Sabi ni manager, gusto ko every second may info. Wala tayong magagawa, no? Yun yung utos ni boss. When the boss tells you to prepare the information every day, then you have to follow it on an as-needed basis. Okay? On an as-needed basis. Ayos ba tayo? That's frequency. Basis. The basis for reporting financial accounting, it's historical. Basis for reporting, historical. We only report on historical info under financial accounting, meaning the transactions should happen before we're going to present them in the income statement. While managerial accounting, the basis of the information can come from forecasted data, budgeted data, or even historical data. You have to make a distinction between financial and managerial accounting. Okay? Itong mga tagalabas, madali silang lokohin. Kaya para hindi sila maloko, dapat yung mga proven information na nangyari na yung transaction. Sa managerial accounting naman, yung boss naman yung naguutos. So kung sinabi ng boss gumamit ng forecast, budgeted info, historical info, kung ano man ang sasabihin niya, kahit ano, sundin mo. Pero kung tagalabas yung mag-uutos, madali kasi silang lokohin, no? Madaling sabihin ng company, uy, yung revenues next year magiging ganito na. Para maiwasan yung pampahype, no? Tinatawag natin pampahype, the basis should always be historical. Okay? Historical. Yun lang yung pwedeng ilagay sa FS as a general rule. Emphasis. Financial accounting, the emphasis is reliability. Don't get me wrong. For both accounting reliability and relevance, they are important. Reliability and relevance is important in financial accounting. Reliability and relevance is also important in managerial accounting. But the emphasis in financial accounting is reliability, while in managerial accounting, the emphasis is relevance. Malinaw? Reliability. Reliability can be loosely defined as freedom from error. It's not 100% accurate, but it should be free from error. It should be verifiable. Okay? Yun yung reliability. Okay? Yun yung reliability. So, pag sinabi nating reliable siya, pwede siyang i-verify. Hindi siya nagpapa-hype sa atin. Maingat siya. Prudent. Tapos, hindi rin siya puro mali, no? Freedom from error. That's one of them. So, when it comes to financial accounting, tagalabas yung kausap natin. The company is going to release information to outsiders. The outsiders should be given reliable info. That's the reason why, even though it takes a long time to audit, before publishing the FS, it should be audited. Before the companies would publish financial statements under financial accounting, they should be audited to make it reliable. Eh sir, masyado naman matagal yung 3.5 months. No? It can take as long as 3.5 months before publishing the FS. After year-end. Madalas, April 15. No? Madalas, December 31 to April 15, yan yung busy season ng mga auditor. Meanwhile, in managerial accounting, the information is generally not being audited. Hindi naman ino-audit. No? Pag sinabi natin managerial accounting, it should be relevant. It should be timely. By the time that the decision is to be made, the report should be ready, even though it is not yet 100% complete. Okay? We can sacrifice a little bit of reliability in order to be relevant at the moment. Sabi ni manager, bukas, gagawa na tayo ng decision. All information that we can take in this day, we will try to compile them as soon as possible. If it is not so complete, we can put some estimates. Hindi ganun kahigpit. Ang importante, by the time the decision is to be made, the information is already ready. So, iba yung focus, no? Ay, iba yung emphasis. Sa financial accounting, we emphasize being reliable. Huwag kang magkamali, ha? Okay. So, subject to materiality constraints, huwag kang magkamali. Be reliable. But for managerial accounting, pag sinabi ko now na. Yun yung sabi ng boss. Diba? Okay. So, in managerial accounting, relevance is more important. Focus. Let's talk about the focus. Financial accounting, we report on the aggregate. We report on the aggregate. What do we mean by reporting on the aggregate? Kapag sinabi ko we are reporting on the aggregate, we're reporting on the group as a whole. No? On the group as a whole. What do I mean by group? Kapag isang company yan, yung buong company. If it is a family of companies, it is a group of companies, advanced financial accounting tells you to prepare a consolidated financial statement. Sino bang kausap mo sa financial accounting? Who are you reporting to in financial accounting? The investors, the lenders, and the trade creditors. If they view our group as one unit, okay, then we should prepare a report as one unit. Papautangin ko kayo, San Miguel, no? San Miguel, example. Papautangin ko kayo, SM Group. Papautangin ko kayo, JG Summit, no? Yung Robinson's Group, no? We are going to prepare an information for the entire group of companies. Aggregated data. Kapag investor ka ng isang group, okay, you would want to know the total of your profits. Diba? Bukod sa bawat company, may FS din na consolidated. parent with subsidiary. Okay? We aggregate, we group the data so that the lenders can decide whether as a group, the company is going to pay the interest and principal repayments. When the investors will decide, when the external users like the investors will decide, they're going to decide whether the group is worth investing in. Kung mag-i-invest ba ako sa stocks ng group na to, magkakaroon ba ako ng dividends? Hindi na importante kung paano. Ang importante as a whole, ano yung performance. In managerial accounting, it's different. In managerial accounting, it's different. In managerial accounting, the users are the managers. Some managers are in the low level. If you are a low-level manager, you're in charge only with one branch, one product line, or one department. Therefore, the focus of the report should not be for the company as a whole, but for each segment. Ito yung FS ng branch 1. Ito ang FS ng branch 2. Ito yung FS ng branch 3. Kung pinapagawan man ng FS. Pero madalas, ang importante, bawat branch may income statement. Not necessarily may balance sheet, pero may income statement yan, no? We call it segmented income statement. Why? Because the managers are going to decide, is this branch profitable? Kung hindi naman profitable ang branch na to, baka isara na natin itong isang branch. Kaya, importante, may income statement yung isang branch. Should we keep? Should we drop? Ayun, naalala niyo yung lecture na yun, no? Keep or drop. Okay? Now, what about the manager assigned for branch 2? Mukhang hindi maayos magtrabaho. Maayos ba siya magtrabaho? We would see whether the controllable costs are being kept in check. So meron tayong mga controllable margins to be discussed in responsibility accounting. As you can see, an outsider has a different interest in the company when you compare it with the interest of the insider. This is the main reason why financial accounting and managerial accounting, they are separate disciplines. Okay? Financial accounting, we group the entire FS. Managerial accounting, we create segmented data. Segmented income statements, for example. Nature. Financial accounting, sinabing inventory, the inventory in the balance sheet should be expressed in financial terms. Monetary amount. Financial terms, that's a monetary amount. While in managerial accounting, it is expressed either in peso amount, financial, or in units. Okay? Units, kilograms, liters, kung paano nyo man i-express yan. Okay? In financial accounting, the data should be financial. The nature of the data should be financial. In managerial accounting, it's a combination of financial and non-financial. Balance sheet, land, 1 billion pesos worth of land. That's financial accounting, 1 billion peso. Sa managerial accounting, you can express land in terms of peso, in terms of its cost, fair value, in terms of its area, ilang hectares or ilang square meters. In managerial accounting, we express information in different forms, not only in financial. Kasi sa balance sheet ng financial accounting, puro kasi naka-peso amount. Financial accounting is regulated. We have standards. SEC requires that we use the PFRS, Philippine Financial Reporting Standards, which is 90+% IFRS, which is 95+% IFRS. We have our PFRS as our GAAP. Managerial accounting, on the other hand, has no regulation. Kung wala kang balak mag-report ng maayos sa managerial accounting, malalagot ka sa boss mo. Pero yung format, paano yung reporting, kayo na bahala ng boss mo kung ano yung pinag-usapan nyo. Sa financial accounting, hindi pwede. There is a standard of reporting. Is it required? Financial accounting is required by law, it's required by the government, while managerial accounting is not required. Kung ayaw nyo ng managerial accounting, di okay lang, no? The company is not forced to have it, but the company will be at an advantage if there's managerial accounting. At the end of the day, you have to understand. At the end of the day, you have to understand that both of these two are accounting. And therefore, they deal with transactions, which we call economic events. They deal with transactions, economic events. Those events that have a flow of resource. We call them economic events. Okay? Both of this accounting would rely on cost accounting. So kung cost accountant ka, matutulungan mo both sa financial at managerial accounting. Okay? And both would depend on KPIs. Both of these two would need their information be handled by the accounting information system. Considering that we are considering the technological landscape, okay? Napaka-importante na, no? Napaka-importante na yung pag-improve ng AIS natin. No, mas complicated na yung ating business models compared sa traditional. So, much weight is being placed on accounting information system. Unfortunately, yung undergrad hindi pa nagka-catch up, no? Yung accounting information system para lang siyang hindi nyo masyadong iniisip, no? Okay. Now, we will proceed next to the difference between a line position and a staff position. But before that, we would like to verify whether you are still with me and you are understanding. Please type OK and enter if everything is good. If there's some problem with the connection, with my voice, with my speed, please point it out to me now. Kung wala, just type OK and enter. Okay, thank you for confirming. So everything is okay. We will now talk about the difference between a line and a staff position. So I will give you some time. What makes a function a line position and what makes it a staff position? Ano ba yung pagkakaiba ng line at ng staff position? Bakit ba may ganyan? Okay, difference between a line and a staff position. I want you to imagine a shoe company. Imagine nga kayo, no? Mag-imagine kayo ng company ng sapatos. Imagine kayo ng company ng sapatos. Okay? Let's call this a shoe manufacturing company headed by a CEO. Headed by a CEO. So, shoe company, ha? Now, yung shoe manufacturing company, nagre-report sa kanya yung Chief Financial Officer. Tsaka yung Chief Operating Officer. So, yun yung dalawa. May Chief Financial Officer tsaka Chief Operating Officer. Reporting to the CEO, CFO, and COO. Now, who reports to the CFO? It may include the controller, and sometimes there's a separate treasury department. The COO, it depends on the nature of the business. It depends on the nature of the business. In this type of nature, in the type of nature of the business that we have, shoe manufacturing company, reporting under the COO is most likely to be the plant manager, no? yung plant manager mismo yung magre-report sa COO dahil syempre, yun naman yung gawain ng COO, operations. Ang tanong lang, anong operations ng company? Kung shoe manufacturing company yan, edi ang magre-report sa kanya yung gumagawa mismo ng sapatos. So more likely, it would be the plant manager. Again, more likely, it is the plant manager who's going to report to the COO. So under the controller, you would have accounting staff, accounting supervisor, tapos yung pinakamababa, accounting staff. And then under the plant manager, you will have some plant supervisors. Ang pinakamababa, yung mismo na sa assembly line, yung gumagawa ng sapatos. Okay? Yung gumagawa ng sapatos. So ito yung tanong ko sa inyo. Okay? How would you differentiate line from staff? Now, the difference lies here. Line functions are directly involved in the provision of goods and services. Line functions are directly involved in the provision of goods and services. While staff functions, they are there to support the line functions. Sino yung talagang gumagawa ng trabaho na related dun sa produkto o kaya sa serbisyo ng negosyo? In our case, who is doing the shoes? Who is producing, rather, the shoes? Sino yung gumagawa ng sapatos? E di yung assembly line personnel. Therefore, this is a line function. Whoever is holding the shoes, okay? Whoever is holding the shoes would be part of the line function. Now, wala kang sapatos. I mean, hindi ka ang gumawa, hindi ikaw yung gumagawa ng sapatos. Hindi ka magiging part ng line function. Now, ikaw ba yung nagbebenta ng sapatos? E di line function ka. Ikaw ba yung gumagawa, nagde-deliver, nagbebenta? Those are line functions. Now, if you are simply doing some recording, you're simply doing some training, you're simply providing the necessary support for the line functions, you are just a staff position. It has nothing to do with the rank. So an assembly line personnel is a line position and the accounting staff is a staff position. Okay? And everyone on top of the assembly line personnel until the CEO, they will be considered line positions. Yellow line, that's a line position. Yellow line position yan. The yellow circle. The yellow circle, line position yan. What about the green one? That's a staff position. The green one, that would be staff position. Okay? Next. How would you differentiate controller from a treasurer? How would you differentiate a controller from a treasurer? Sige, let's differentiate the role of the controller and the treasurer. The highest finance officer in the company is likely to be called the CFO. For large companies, the highest, no, yung pinakamataas na position ng finance and accounting, both finance and accounting, it is the CFO. Highest chief officer related to finance and accounting, chief financial officer. Chief financial officer. Okay? So, kapag malaki yung company, may hiwalay na controllership and treasury under the supervision of the CFO. The controller is someone who is doing the accounting and reporting. The office of the controller, the controllership, has something to do with preparing the FS, accounting reporting, as well as internal control. Yun yung kinaibahan ng controller sa treasurer. Si controller, accounting talaga. Treasury, on the other hand, has something to do with investment decisions and financing decisions. Bibili ba tayo ng bagong building? That's under the Office of the Treasury. Building Acquisition, Office of the Treasury. Okay? Should we use owner funds or should we borrow? Hihingi ba tayo ng pera sa may-ari or mangungutang na lang tayo? We call that leverage financing. No? We call that financing. So, kung mangungutang tayo, magkakaroon tayo ng interest expense. Pero kung hihingi tayo ng pera sa may-ari, sayang naman yung pera nila, no? Nagdadagdag pa sila ng puhunan. So the Office of the Treasury will deal with investment and finance decisions. Okay? Hindi nga kung naintindihan nyo, sino ang kausap yung BIR? Sinong kausap ng BIR? Controller or treasurer? BIR. Sino? Okay, very good. Julia. It's the controller who is going to talk with BIR. Okay? Sinong may kausap na Sino kausap ni SEC? Sinong kausap ni Securities and Exchange Commission? Is it the treasurer or the controller? Securities and Exchange Commission? Okay, still the controller, ha? It's still the controller. Why? Because the SEC requires you to prepare the FS. Financial accounting yun, di ba? Accounting pa rin yun, financial accounting. So, kausap ni controller yung SEC tsaka BIR. Government functions, more or less, it would be the BIR. It would be the controller who's going to talk with them. Okay? Sino may kausap sa bangko? Sino may kausap sa bangko? Who is going to talk with the banks? Okay, Jorge or George? This is George or Jorge? Okay, George. I assume this is George. You are correct. That's treasurer. Okay. Marami pala, no? Julia, Jerica. Okay, you're correct. JJJ, Julia, Jerica, and George. The treasurer is the one in charge talking with the bank, other potential sources of funds. Saan tayo kukuha ng pondo? Are we going to take money from the bank, from the owner? And where are we going to put the money? Who is going to conduct capital budgeting? Sino ang magko-conduct ng capital budgeting? Controller or treasurer? Capital budgeting. Okay, very good. George, yeah, correct. Treasurer. Okay? That's it. And that's it for the introduction to management accounting. Do you have any questions? Wala? Okay. We shall now proceed to CVP. Kung may question kayo, just bring them up as soon as you want to talk. Anytime. Okay, we shall now proceed to CVP analysis. Ay, meron pala. George, yeah. What's your question? CR break. Sige, sige. Sige, mag-CR ka muna. 2 minutes. Sige. Mag-CR daw si George. Okay? Game tayo. Sige. 1 more minute. Okay, so we are now going to resume. We will proceed to CVP analysis. We will now proceed to CVP analysis. Cost volume profit analysis. Cost volume profit analysis. CVP analysis is a tool used for decision making that utilizes the relationship among the following: volume of sales, sales price, the variable cost, fixed cost, profit, and the mix of sales. CVP analysis is a tool used for decision making that utilizes the relationship among volume of sales, sales price, variable costs, fixed costs, profit, and the mix of sales. CVP analysis uses the contribution margin approach. Yung relationship ng volume, price, tsaka cost, pwede natin i-manipulate yan para gumawa ng what-if analysis. We can actually conduct sensitivity analysis. What if the price goes up? What if the cost would go down? What if the volume will be lower than expected? What if? Mahal pa niya ako? Something like that. No? So, pwede kayo gumawa ng mga what ifs when you are going to understand and master the relationships among cost, volume, and profit. Okay? Knowing the relationships among these different variables would be a very powerful tool. You can conduct cost, volume, profit analysis. But first, we have to understand how this works. We should use the contribution margin approach in the preparation of the income statement. What's the contribution margin format? The contribution margin format is a presentation of the income statement where after sales, you're going to deduct all variable costs instead of the cost of goods sold to arrive at what we call the contribution margin. Then we are to deduct fixed costs. Contribution margin minus fixed costs, you have your operating income. Understand this, ha? Intindihin nyo to. Pag sinabi kong contribution margin format, the classification of costs will be based on behavior. Cost behavior yung basis natin. Okay? The cost classification will be based on behavior when it comes to the contribution margin format. Okay lang? Sanay kasi tayo sa financial accounting. Sales minus cost of goods sold, gross profit. Minus selling and admin expense, you will have your operating income. Okay? But in the contribution margin format, we classify costs based on behavior, not based on function, but based on behavior. Whether they are variable costs, and therefore they would go up and down together with sales, or are they fixed costs, which they will remain the same in total no matter what happens to the sales. I repeat, we may conduct sensitivity analysis when we master the interrelationship of the different variables in CVP. Given the following projected contribution margin income statement for the coming year, please answer the following. Determine the total contribution margin, unit contribution margin, and contribution margin ratio. 2. How much will operating income be if only 80 units will be sold instead of 100? 3. How much will operating income increase if 150 units will be sold instead of 100? Okay lang? So when you answer, please answer in one line lang, no? Ilagay nyo na yung sagot nyo sa number 1, tatlo yon, number 2, and number 3 in one line. Okay? I'm going to wait them here. Just type them in the chat box. I will give you 2 minutes. Wait for my go signal before you enter your answers. Okay? Type your answers now. Please type. And upon my signal, press enter. Enter. Enter your answers. Enter your answers. Okay, we have one here. So that's 7,070 and 70%. Kung ano lang yung nasagutan nyo, yun lang yun, no? Kung ano lang yung nasagutan nyo, yun na lang yun. Okay, okay. Number 2. Ba't naging 1,000 sagot nyo? Number 2. Number 3. Naging 8,000 naman yung sagot nyo. O, sige. Titingnan natin to, ha? We're going to do this together. Don't worry about it. Okay, so don't worry about it kung hirap kayo. I'm just testing, no? Kung ano pa yung mga naalala nyo tsaka hindi na. Determine the total contribution margin that's given, 7,000. Unit contribution margin, so divide mo lang ito sa units. Contribution margin ratio, this divided by the sales, CM over sales. So that's question number 1. Sales is 100 units, 1,000. Variable cost is 3,000. Contribution margin 7,000. Fixed cost 4,000. Operating income 3,000. Kunin nyo yung unit figures niya. Kunin nyo yung unit figures nila. So the unit figures are 1,000 divided by 100 units, 100. 3,000 divided by 100 units, 30. 7,000 divided by 100 units, 70. Okay? 10K over 100, 100. 3K over 100, 30. 7K over 100, 70. Game. Okay lang? Okay, sana okay lang kayo. Ha? So, our CM is 7,000 in total. Total contribution margin, 7,000. Unit contribution margin, 70. Kunin nyo lang yung price minus variable cost per unit at 70. Ratio ni contribution margin kay sales, 70 over 100. O kaya, total CM over sales, 7K over 10K. You will have the following, 70%. You will have the following, which is 70%. Now, at this point, I would like you to appreciate how to arrive at the contribution margin. If all of this is given, you can arrive at the contribution margin in total with the following. Deduct from your sales the variable cost. 10K minus 3K, 7K. 10K minus 3K, that would be 7K. 70 times 100 is 7K. 70 times 100 is 7K. Okay lang? 70 times 100, 7K. 70% of 10,000 is 7K. So nakita nyo kung paano kayo umatake sa contribution margin. There are different ways to arrive at the contribution margin, which is defined as sales minus variable cost. You may multiply the unit contribution margin by the sales volume. 70 times 100 is 7,000. You may also multiply the contribution margin ratio by the sales revenue. Total contribution margin, 7,000. Okay? Yun lang naman, no? Yun lang naman. Pag sinabi natin 7,000 pesos, paano narating yan? Maraming paraan. I'll call this the first way. Unit CM times sales units. Unit CM times sales units. Total contribution margin. First way ang tawag ko doon. Second way, contribution margin ratio times sales revenue. That's the contribution margin as well. I'll call it the second way. Okay? First question. Question number 2. How much will operating income be if only 80 units will be sold instead of 100? Napakadali kapag 80 units lang yung nagbago. Hindi na ako pupunta sa sales tsaka sa variable cost. Kung units lang ang nagbago, I'm going to use the unit CM, 70, immediately multiply it by the number of units sold. 70 times 80, 5,600. The fixed cost doesn't change. Hindi nagbabago ang fixed cost. Tandaan nyo yun. The fixed cost would still be the same. 5,600 minus 4,000, your new operating income should be 1,600. This is the reason why you are discouraged from expressing fixed costs as a per unit item. Huwag niyong i-calculate yung fixed cost per unit. Dahil nagkakaroon kayo ng impression na yung fixed cost nakadepende sa number of units sold. Hindi kasi siya ganun. The fixed cost should remain the same no matter what. Okay? No matter what. This is the answer for number 2, 1,600. 1,600. Good question. How much will operating income increase? You're asked for the increase. If 150 units will be sold instead of 100. How much will operating income increase if 150 units will be sold instead of 100? Ano daw yung magiging increase ng operating income? So the increase in operating income, ano yan? Yan muna yung increase ng contribution margin. 70 yung unit contribution margin. The number of units sold is 150 now from 100. Contribution margin will increase by 70 times 150 minus 150. 70 times 50 is 3,500. Yung contribution margin tataas ng 3,500. Huwag nyo na tingnan ng fixed cost dahil madalas naman si fixed cost hindi lumalaki. The fixed cost will remain the same. 3,500 minus at zero change. Increase of 3,500 for the contribution margin. No increase in fixed cost. The increase in contribution margin, this is also the increase of your profit. Okay? Yan din yung increase ng profit nyo. Do you agree? Do you agree? So sana nakuha nyo ha. Ang ibig kong sabihin nito, yung contribution margin, lalaki ng 50 units. 70 times 50, dagdag 3,500. Yung fixed cost, hindi yan gumagalaw. Kaya nga siya tinatawag na fixed. Tumaas, bumaba ang sales mo, same pa rin yun. No? So, the question was, how much will operating income increase? You're looking for the increase. The increase is 3,500. Mga sumagot ng 6,500, sinagot nyo yung bagong operating income. So, ang gagawin nyo lang, i-minus nyo yung luma. 6,500 minus 3,000, 3,500 yun. Pero hindi nyo kailangan gawin yun. Because you can master the relationship among variable cost, fixed cost, volume, price. If you can master this relationship, you can calculate this in one line. 70 times 50, you would have 3,500. Okay? 70 times 50, that's 3,500. Okay? Is everything clear so far? Is everything clear so far? Please confirm again by typing okay. Okay, so everything is okay. So we're now going to proceed to the assumptions for CVP to work. Assumptions for CVP analysis to work. Now, hindi basta gumana yung CVP unless masasabi natin totoo ang mga statements na to. Dapat totoo or halos totoo yung statements na to bago natin gamitin yung CVP natin. Revenues and costs behave in a linear manner. Revenues and costs behave in a linear manner. So, kung 5 pesos ang isang unit, dalawang units, 10 pesos. 5 times 2 is 10. Sa tunay na buhay, pwede kayong tumawad. Pwede ba ganito na lang yung presyo? Bibili naman ako ng marami. Sa tunay na buhay, pwede kayong tumawad. Pero pagdating sa CVP, i-assume nyo na wala tayong patawad. Okay? Revenues and costs behave in a linear manner. If one item is 5 pesos, 2 would be 5 times 2, 10. 3 would be 5 times 3, 15. Sa tunay na buhay, pwede nyo sabihin, pwede bang 13 na lang yung presyo? Kawawa naman, no? Yung seller. Pwede bang 14 na lang yung presyo? Pwede kayong tumawad. Pero sa CVP analysis, i-assume na bawal tumawad. Costs are either variable or fixed. If mixed, it can be segregated to its variable and fixed component. Only volume affects the cost and revenues. Huwag niyo munang pansinin yung activity-based costing. Yung basis lang natin ng variable cost, depende sa volume. Kung tumataas yung sales volume, tataas din yung variable cost. Kung bababa yung volume, bababa yung revenue, bababa yung variable cost. Fourth, we will assume that production volume and sales volume are the same. Production volume and sales volume the same. Wala kang ending inventory. Okay? Then later on, when we will deal with different products, the product mix is constant. The product mix is constant. Which of the following is not an underlying assumption of CVP analysis? Not an underlying assumption of CVP analysis. You have 1 minute to answer. I will signal you when to press enter. Ha? Huwag niyo munang ibigay yung sagot niyo agad. So, based on what I have discussed, let's test. Ha? Which of the following is not an underlying assumption of CVP analysis? Enter. What's your answer? Enter. Okay. So, very good. Galing nyo, no? Huwag nyong pansinin yung activity-based costing. Changes in activity and other factors affect cost. No, only the volume, the number of units produced and sold is the main driver of revenues and costs. Huwag niyong pansinin muna si activity-based costing. Ha? Very good. The correct answer is A. Okay? Boy, C, and dog, they are all correct. Boy, C, and dog. When more than one type of product is sold, the total sales will be in a constant sales mix. All costs, either variable or fixed. The behavior is linear throughout the entire range of the activity index. Okay? Now, the most popular application of CVP analysis will be on break-even and target profit analysis. Okay? Break-even and target profit analysis. Let us have a few minutes to derive the formula. Can you simplify this? What is the simplest form of this? Okay? What's the simplest form of this? I want the fixed cost to be in the right side of the equation and simplify this equation further. I'll give you a few seconds to do it. Okay, this is how you would simplify it. Sales revenue minus total variable cost. This is the total contribution margin. I just want fixed cost to be on the other side of the equation. Rather than minus, it now becomes a plus. Total fixed cost plus operating profit. This should be equal to the total contribution margin. Okay? Ito na yung simplified. Remember, we may express the total contribution margin in different ways. First way, you can multiply the unit contribution margin by the sales units. Total contribution margin is unit CM multiplied by the number of units. This is equal to total fixed cost plus operating profit. Meanwhile, the other way later, when you are going to, ito muna tayo ha, focus here. When you are going to simply rearrange the formula, you can arrive at the number of units sold by dividing total fixed cost plus operating profit over the UCM. So if you want to reach a certain operating profit, you can set your operating profit here. Just plug in the total fixed cost and the UCM. You would be able to arrive at the number of units sold to arrive at your target profit. The target profit point in units is total fixed cost plus operating profit over the unit contribution margin. Okay? Again, the target profit sales in units. This is equal to the total fixed cost plus operating profit divided by the unit contribution margin. Next, you may also express the total contribution margin as the product of contribution margin ratio and sales revenue. Pwede rin yung ganito, no? This should be equal to total fixed cost plus operating profit. Okay, when you put this on the other side of the equation, for the revenues to be arrived at, just add your operating profit to your total fixed cost. This time divide by the CMR. You will arrive at the target profit point in sales revenue. So you're able to derive the formula for the target profit. Target profit point in units, total fixed cost plus operating profit divided by the unit contribution margin. Target profit in sales revenue, total fixed cost plus operating profit divided by the contribution margin ratio. Okay? Now, pag sinabi ko namang break-even, wala kang lugi, wala kang kita. Your profit or loss is zero. When I say break-even, you have no profit, you have no loss. If you would like to arrive at a break-even point in units, just assume that the operating profit is zero. You have total fixed cost over UCM. Similarly, if you would like to arrive at the break-even point in sales revenue, just assume profit is zero. Total fixed cost divided by the CMR. Total fixed cost divided by the CMR. One more time, this time slowly. This time slowly. Sales revenue minus total variable cost minus total fixed cost is operating profit. Total contribution margin is the difference between these two. Total CM minus total fixed cost is operating profit. Put total fixed cost on the other side of the equation. There are many ways to arrive at the total contribution margin. The first way is the product of UCM and U. This is equal to total fixed cost plus OP. You would be able to arrive at the target profit point in units, number of units to be sold. If you express the TCM as the product of CMR and sales revenue, this is equal to TFC plus OP. Okay? You can arrive at the target profit point in sales revenue. It's total fixed cost plus OP. divided by your contribution margin ratio. Divided by your contribution margin ratio. Now, break-even point in units is equal to total fixed cost divided by UCM. Break-even point in sales revenue, that's total fixed cost over your CMR. Okay? Tanggalin nyo lang yung operating profit. Yun na yung mga break-even formula. The break-even point is the level of sales, whether in units or in revenue. We can express it in both ways. The break-even point is the level of sales where profit or loss is zero. Your revenues are just enough to cover the costs. Your revenues are just enough to cover the costs. Now, I want you to answer this problem. I will give you 2 minutes. The break-even point, rounded to the nearest dollar, for Barnes Corporation for the current year is. All answers in? Enter. All answers in? Enter. Wala pa? Sige, sige. Wag muna ha. Ayun, meron na. So, sabi ni Marjorie, that's C. Okay? What about the rest? Sige, enter nyo na kung ano yung sagot nyo. Yung isa, meron na oh. May isa na tayong sagot. So, sige, I'll give you a few more seconds. Just enter your answer. Okay, anong answer nyo? Sige na, enter. Enter your answers, whatever they may be. Please enter your answers, whatever they may be. So, the break-even point for Barnes Corporation for the current year, accordingly, letter C daw. Yung iba, anong sagot nyo? Anong sagot ng iba? The first thing that you should take note is the income statement is not prepared according to contribution margin format. Ihihiwalayin nyo pa. Example, DMDL and VOH and variable selling admin. Those are the variable costs. 250 plus 150, 250 plus 150 plus 75 plus 200. The total is 675. Yun yung variable cost. The fixed cost, fixed overhead yan, tsaka fixed selling and admin. Fixed overhead yan, tsaka fixed selling and admin. Okay? The break-even point rounded to the nearest dollar for Barnes Corporation for the current year is, so ano yung variable cost? 675, no? Itong tatlo tsaka ito. 1.5 minus 675, 825 divided by 1.5. The contribution margin ratio is 55%. The correct answer is C. Fixed cost, 100 plus 250 is 350K. 100 plus 250 is 350K. Contribution margin ratio, 55%. 1.5 minus yung mga variable costs, that's the CM. No? Okay. Then divide by 1.5, 55%. 350 divided by 0.55, that's 636, 364. Indeed, the correct answer is C. Indeed, the correct answer is C. Very good. May isa tayong tamang sagot. Marjorie, how about the rest? Okay, kung hindi kayo sure, just try to answer. No? Just try to answer. Next question. O, ito, naka-label na. Ha? Alin dito yung variable? Alin dito yung fixed? Sorry. Alin dito yung sales price? Alin yung fixed cost? An analyst calculates the dollar sales break-even point for a product as $500,000. The product sells for $25 per unit. Fixed cost 150K. What is the contribution margin per unit? Okay. All answers in? All answers in? Yung question lang naman ay yung contribution margin per unit. Contribution margin per unit. Please give me your answers. Please give me your answers. Walang nakasagot. Please give me your answers. What is the contribution margin per unit? Di ba sinabi ko yung formula ng break-even point? In sales revenue, that's total fixed cost divided by the CMR. Tama? The break-even point for the product in sales revenue is 500,000, total fixed cost 150,000. The CMR can be calculated as 0.30, 0.30 or 30%. Okay lang? If the CMR is 30%, the price multiplied by 30% CMR, it will give you the contribution margin. The correct answer is boy 750. Wala tang nakasagot ngayon, no? Wala tang nakasagot. The correct answer is 750. So, do you follow? Despite the fact na walang sagot, can I get a can I get a response? Are you following? Nakakasunod pa rin? Paputol-putol, mahina ang net. Okay, sige lang. Ulitin ko ha. You're just going to look for the contribution margin per unit. Break-even point in sales revenue is equal to TFC over CMR. Break-even point in sales revenue is 500K. 150K yung fixed cost. Work back nyo na lang yung CMR, 30%. Once you get this 30%, sales price is 25, multiply it by 30%, the contribution margin is 750. The correct answer is boy. Okay? What about this one? What about this one? Magbibigay ako ng mas mahabang time, ha? Nababasa nyo naman. Given a unit selling price of $100, fixed cost $3,000, variable cost per unit $75, and a total quantity of 150 sold. What is the break-even point? Use the equation method or kayo na bahala. Whatever method you're going to use. I'll give you 3 minutes, ha? I expect an answer in 3 minutes. Okay? Start typing your answers. Start typing your answers. I expect na may sagot kayo, ha? May sagot sana kayo. 1 more minute. I'll give you 1 more minute. Please start typing your answers. The question is simply, what's the break-even point? Okay, all answers in? All answers in? So what's the correct answer? Okay, thank you for answering, everyone. Tama man yan o mali, I know that you are trying. The question is, what is the break-even point? Okay? Itong total quantity na 150 sold, it doesn't follow that this is the break-even point. The price is 100. The variable cost per unit is 75. Fixed cost is 3,000. 3,000 divided by 25, tama ba? Break-even point in units is total fixed cost divided by the UCM. So UCM is 100 minus 75, that's 25. 3,000 divided by 25, the correct answer is letter C, 120 units. Ganun kasimple, no? Total fixed cost, 3K. UCM is price minus variable cost, 3,000 divided by 25. Break-even point in units is 120. Letter C. Again, appreciate your answers. Next question. Next question. Clue for the next question. This is my clue. Hindi lahat ng fixed cost masasabi mo para talaga sa produkto na pinag-usapan natin. May mga ibang fixed cost na binigay dyan, pampagulo lang. No? Pampagulo lang. Okay? Please try answering. I'll give you another 3 minutes. Okay? Start typing your answers. Start typing your answers. So, what is your answer? What is your answer? Ano ang sagot nyo? Ano ang sagot nyo? Brewell Electronics Company is developing a new product, surge protectors for high voltage electrical floats. The following cost info relates to the product. 325, 4.75. These are variable costs. Materials, labor, and distribution can be thought of as a variable cost. The company will also be absorbing $120,000 additional fixed costs associated with this new product. A corporate fixed charge of 20K currently absorbed by other products will not be allocated to this new product. Huwag niyong pansinin si 20K. Corporate fixed charge lang yan. Inabsorb, nilagay lang sa kung saan man. This has nothing to do with the current new surge protector. Only the 120,000 additional fixed cost would be relevant here. How many surge protectors, rounded to the nearest 100, must Brewell Electronics sell at a selling price of $14 per unit to increase after-tax income by 30,000? Brewell Electronics' effective income tax rate is 40%. So I believe that you know this. If the profit is after tax, okay? If the profit is after tax, you should gross it back to its before tax form. 30,000 to, no? Kung yung tax rate natin ay 40%, 30,000 divided by 1 minus 40%, ang ita-target nyo yung before tax. Bakit nyo ita-target yung before tax? Dahil kung ita-target nyo yung after tax, matataksan pa kayo, bawas na yung kita nyo. So ang ita-target nyo, yung before tax. Kung ita-target nyo yung before tax, mas malaki yung makukuha nyo. Kung tataksan man kayo, makukuha nyo pa rin yung 30K. 30K divided by 1 minus 40, 60%. 30K divided by 60% is 50K. The target profit should be 50,000. So, target profit point in units, total fixed cost plus operating profit over UCM. The total fixed cost is 120,000. Profit is 50K. Divide this by the unit CM of 14 minus 8. 14 minus 8. Yun yung unit CM. Price minus the unit variable costs. The total is 8. 14 minus 8 is 6. Ulitin ko ha, yung target profit, i-target nyo yung before tax. 50K. Wag lang 30K. It should be 50K. Kasi yung 50K, matataksan pa yan para maging 30K. So 120K plus 50K divided by 6, that would give you 28,333 units. The closest answer of which is boy. The closest answer of which is boy. 28,333 units. What about this one? What about this one? Robin Company wants to earn 6% return on sales after taxes. The company's effective income tax rate is 40% and its contribution margin is 30%. If Robin has fixed costs of $240,000, the amount of sales required to earn the desired return is All answers in. All answers in now. Robin Company wants to earn a 6% return on sales after tax. The company's effective income tax rate is 40%. Target always the before tax. So kung 6% yung target natin after tax, you should target 6 divided by 1 minus 40%. 6% divided by 1 minus 40%. That would be 10%. Contribution margin ratio, this is 30%. If Robin has fixed cost of $240,000, the amount of sales required to earn the desired return is amount of sales required to earn the desired return. So kung gusto nyo makuha yung sales na kailangan para kitain yung desired return, anong gagawin nyo? Ang kailangan nyo lang gawin dito ay i-treat nyo si target profit dahil naka-percentage form siya para siyang variable cost. As if it is a variable cost. So 6% divided by 1 minus 40%, that's 10%. That would give you CMR minus target profit percentage as your denominator. Sanay kasi kayo yung target profit naka-fix. Kaya kung ang target profit ay naka-fix, ina-add back nyo lang sa total fixed cost. And naka-variable yung target profit. Tratuhin nyo siya na parang variable cost. Kinakaltasan sa CMR. The target profit point in sales revenue, total fixed cost is 240,000. This is the total fixed cost. CMR is 30%. The target profit before tax is 10%, calculated as 6% divided by 1 minus 40%. 240,000 divided by 20%. This would give you a target profit of $1.2 million. $1.2 million. The correct answer is boy. Correct answer is boy. $1.2 million. We will be having a 15-minute break. We will be having a 15-minute break. Please be back by 3:15. Magre-resume tayo ng discussion 3:15. Hi, we are now going to resume. We are now going to resume. Patricia, yes, I'm going to upload the recorded video. I will direct you to my YouTube channel so that you can have access to it. And Patricia again, paano i-compute sa normal calculator yung 6% over 1 minus 40%? E di unahin nyo yung 1 minus 40%. Kung 1 minus 40, e di 60. Okay, unahin nyo na agad. Kung 40% yan, malamang 1 minus 40 is 60. Diba? 1 minus 0.4 is 0.6. So, 6% divided by 0.6. Okay? Unahan nyo na lang, no? Yung 1 minus 40%. Okay? So, I hope that's already good. We will now proceed with the next issue. Margin of safety. The next topic will be the margin of safety. Margin of safety is the difference between actual or budgeted sales and the break-even point. This pertains to the amount that the budgeted or actual sales can fall before it will result to a loss. Okay? Tagalogin ko. Ito yung amount. Ito yung amount ng bentahan, sales, na pwedeng mahulog nang hindi ka masasaktan. Okay? Hindi ka masasaktan in a way, wala kang lugi. No? Kunyari, nagbebenta ka ng 1 million. Gaano ka lala na pagbagsak ng bentahan bago ka malugi? Kung mahuhulog from 1 million, nahulog ng 500K, malulugi ka na ba? If the answer is magbe-break even ka pa lang, yun yung margin of safety. Yung difference ng sales tsaka yung break-even sales. Okay? It's the difference between actual or budgeted sales and the break-even point. This pertains to the amount that the budgeted or actual sales can fall before it will result to a loss. Think of it as a buffer zone. The margin of safety is actual or budgeted sales minus the break-even sales. So if this is 1 million and you will break even at 500,000, the difference is 500,000. Ibig sabihin nun, pwedeng mahulog yung sales mo from 1 million to 500,000. Mahulog siya ng 500,000 din. Okay? Hindi ka pa malulugi. Magbe-break even ka pa rin. The amount by which sales can fall without you incurring losses. The margin of safety can also be expressed as a ratio. We call this the margin of safety ratio. MOSR, margin of safety ratio. This is actual or budgeted sales minus the break-even sales divided by the actual or budgeted sales. Actual or budgeted sales minus break-even sales divided by the actual or budgeted sales. Expressed as a percentage of the actual or budgeted sales. Okay? Sige. Given the following income statement, answer the following questions. Do this one by one. No? Do this one by one. CMR, break-even point in sales revenue. Margin of safety. Margin of safety ratio. Interpret number 3 and number 4. That's number 5. You should interpret number 3 and number 4. Then finally, number 6. This is an FS analysis question. What is the sales margin, also known as the profit margin? I shall give you only 2 minutes. Please complete the answers. No? Please completely answer. 2 minutes, go. Julia, yung formula ng MOSR, kunin mo yung MOS, i-divide mo lang sa actual or budgeted sales. Okay, this is the formula ha. Kunin mo lang yung MOS, yun yung numerator. Just divide it by the actual or budgeted sales. Hi Kim, what do you mean by units? What do you mean by units? Yung benta, hindi siya kailangan. You do not need to know the units from uh for this question. Hindi siya kailangan, no? Sige, last 30 seconds. Please finalize your answers. Last 30 seconds. Game. Enter. Enter your answers now. Kung hanggang saan man kayo umabot. Thank you for that, Julia. Next. How about the rest? How about the rest? O, sige, one more minute, ha? Just show me your work. Tuloy nyo pa rin, Julia and George, kung ano yung makuha nyo for number 3, 4, 5, 6. Tuloy lang yung iba. Tuloy nyo lang, ha, yung iba. Sige, finalize your answers. Yung mga may pahabol pa, tuloy nyo lang yung paglagay ng sagot. Ituloy nyo lang yung paglagay ng sagot. Okay. Given the following income statement, answer the following questions. Contribution margin ratio is the ratio of contribution margin to sales revenue. 140 over 400, that would be equivalent to 35%. 140K over 400K, 35%. Break-even point in sales revenue is the ratio of the total fixed cost to the CMR. 105,000, your fixed cost, divided by 35%. The break-even point in sales revenue is 300,000. Next, what about your margin of safety? Your sales revenue are currently 400K. Para mabura yung kita mo, yung operating income mabubura. For this to be erased, it would fall down to 300,000. This is 400K. You will have zero profit at 300,000. Your sales can fall by 100,000. You would still break even. Hindi ka pa malulugi. 100,000 is the margin of safety. If sales will fall by 100K, this is 400 to 300,000, it will fall by 100K. Hindi ka pa malulugi. You're not going to incur losses first. Margin of safety ratio is the ratio of the margin of safety to your sales revenue. 100K over 400K is 25%. Margin of safety ratio, 100K over 400K is 25%. Number 5, interpret your answers. Sales can fall by 100,000, also 25%. Sales can fall by 100,000 or 25% from the current sales. You are not going to experience losses first. The company will not lose if the sales will fall only by 100K or 25% of 400K. But if the losses would exceed 100K or more than 25% of 400,000, then you will experience losses already. Let me repeat. The CMR is the ratio of the contribution margin to sales revenue. 140 over 400, 35%. Break-even point in sales revenue, 105K divided by 0.35, 300K. Margin of safety is the difference between the actual or budgeted sales and the break-even. That's 100K. As a ratio of 400K, 100,000 is 25%. Sales can fall by 100,000 or 25% of its current level. You're not going to experience losses first. But more than that, more than 100K, more than 25%, you will already experience losses. The sales margin or the profit margin, this is the ratio of operating income to sales revenue. The operating profit margin is 35 divided by 400,000, 8.75%. Your operating income or profit, this is 8.75% of your sales. Bakit ko tinanong to? Dahil makukuha nyo yung profit margin using the following formula. If you want to arrive at the profit margin of 8.75%, all you have to do is to multiply the CMR, which is 35%, by the margin of safety ratio, 25%. 0.35 times 0.25 is 0.0875. That's 8.75%. That's your profit margin formula. You can use this formula as a shortcut. Okay? Okay. Please answer this question. On January 1, Lake Company increased its direct labor wage rates. All other budgeted costs and revenues were unchanged. How did this increase affect Lake's budgeted break-even point and budgeted margin of safety, respectively? Enter. Please enter your answers. Ayun, meron na palang mga sagot. So your answers are C, C, B, B, between B and C. No? Is it boy or is it C? Okay, anong sagot? Is it boy or is it C? The correct answer is letter C. Very good. Marami rin sumagot ng letter C. On January 1, Lake Company increased its direct labor wage rates. Variable cost, no? All other budgeted costs and revenues were unchanged. How did this increase affect Lake's budgeted break-even point? Siyempre, kung tumaas yung variable cost, the denominator will go down. Yung denominator kasi nito, UCM. Tama. If the variable cost will become higher, the unit CM will become lower. The denominator is the UCM. Remember? So kung bumababa yung denominator, tumataas yung question, tumataas yung item. So the break-even point will increase because higher direct labor wage rates will increase the variable cost, which will decrease the UCM, which is the denominator. Okay? A lower denominator will increase the break-even point. Okay? How about the budgeted margin of safety? The margin of safety will go down. Kung tumataas yung mga cost, whether variable or fixed, it consumes our profit. Bumababa ng bumababa yung buffer natin. There would be a decrease in the margin of safety. Very good. Maraming sumagot ng letter C. Increase break-even point, decrease margin of safety. Next question. Okay, this is an easy one. This is an easy one. A company currently has fixed costs of $320,000, contribution margin of 40%, net income 80,000. What is the margin of safety? All answers in now. All answers in. So the contribution margin is 40%. Tama. We can calculate the break-even point. 320,000 divided by 40%. 320,000 divided by 40% is 800,000. The break-even point is 800,000. What's the current level of sales? The current level of sales is contribution margin. Wala, no? We can calculate the contribution margin by adding back net income to the fixed cost. Di ba yung CM minus fixed cost, yun yung income? CM minus fixed cost, yun yung operating income mo. Para makuha mo yung CM, add back income to the fixed cost. 80K plus 320K is 400,000. 400,000 is 40% of 1 million. 400,000 divided by zero point 0.4, that would be 1 million. So I repeat, the break-even point is 800,000, calculated as fixed cost divided by the CMR. The current level of sales, you have to look for the current contribution margin. Add back 80K to 320, that's 400K. 400K divided by 0.4 is 1 million. 1 million minus 800,000. The correct answer is letter 200,000. This is the formula. 400K over 0.4, the current sales. 320K over zero point 0.4, using the formula for the break-even point. 1 million and 800K, the difference is 200,000. The correct answer is letter A. Very good. Yung mga sumagot, tumama naman. Okay? So please answer everyone. Okay? Please answer everyone. What is COT's fixed cost? The COT, please answer. What is COT's fixed cost? Go. All answers in. We are looking for the fixed cost. Majority answer is C. Is it really C? Well, you have the following formula for margin of safety. Actual and budgeted sales or budgeted sales minus the break-even point in sales revenue. We know what the sales is and the margin of safety is. That's 80K and 200K and 80K respectively. Sales is 200K, MOS is 80K. Break-even point must be 120,000. The break-even point is 120,000. We may calculate the break-even point by dividing fixed costs over CMR. So may CMR naman na 20% dito. Work back nyo na lang. No? You just have to work back. For this to be 120,000, and this to be 20%, The total fixed cost must be 24,000. The correct answer is boy. Correct answer is boy. May sumagot naman ng boy, pero mas maraming sumagot ng C. Okay? The correct answer is boy, 24,000. Next, ito yung pinakamahirap sa margin of safety. I will give you 3 minutes for this one. What is the amount of sales? Then, dun sa variable cost, yung variable cost kasi merong cost of goods sold, merong selling and admin. Hanapin nyo yung variable na selling and administrative expense. Go. All answers in. All answers in. Give me the sales revenue. Give me the sales revenue. Kahit yung sales revenue muna. Kahit yung sales revenue lang muna. Yun lang muna, please. Okay, kahit sales revenue lang muna. Okay, dahan-dahanin ko ha. Gawan natin ng income statement. Sales, please ignore this. Nagkamali lang ako. There's no units here. Sales, variable cost, contribution margin, fixed cost, and operating income. The only given here is the fixed cost of 1.2 million, and we know that the profit margin based on sales is 8%. So, the operating income must be 8% of whatever the sales is. And the fixed cost, it is a given 1.2 million. We know what the margin of safety is and the profit margin. Therefore, we can work back on the contribution margin. Remember, margin of safety times contribution margin is the profit margin. So if you want to arrive at the contribution margin, all you have to do is to divide the profit margin by the margin of safety. Pinakita ko yan kanina. 8% over 20% is 40%. The contribution margin is 8 over 20, that's 40%. Squeeze the fixed cost. The fixed cost is the difference between 40% of sales and 8% of sales. This must be 32%. This must be 32%. 1/2 divided by 0.32, your sales is supposed to be 3,750. Ay, sorry, Kim, no? Wait lang po. Sorry, hindi kita na-wait. Oo, ngayon ko lang nabasa. Ay, sorry ha. Gusto mo pala sagutin, no? So, I appreciate that you would want to answer it. Sorry talaga. Late ko nabasa. Kaya nyo na, no? So, yun yung sales, no? Yung binigay lang sa atin, itong dalawa lang. Alam lang natin yung operating income, profit margin niya, 8%. 8% of sales. Yung fixed cost, 1.2 million. Yung contribution margin, makukuha nyo yan eh. Pag dinivide nyo si 8 sa 20, 40% yung makukuha nyo. Because remember, profit margin is equal to contribution margin times the margin of safety ratio. So, i-divide mo lang para makuha mo si contribution margin ratio. The difference between the two is 32%. So, fixed cost is 32% of the sales. 1/2 divided by 0.32, you will have 3,750. Makukuha nyo yung 3,750. Next, what is the variable selling and admin expense? Yung sales natin, 100% yan ng sarili niya. So, yung variable cost, yung naiwan na 60. CM is 40% of sales. The variable cost must be 60% of sales. Out of the 60, 25 is cost of goods sold. 25 ng 60, this is cost of goods sold. The remainder is 35%. Kung hindi siya COGS, ito yung variable selling and admin expense. This would be variable selling general admin expense. 3,750 times 0.35, 131,500. This is the correct answer for number 2. 1,312,500. 1,312,500. Next topic na tayo. Are there any concerns about the indifference point before we move forward? Sorry, margin of safety. Are there any concerns with the margin of safety before we move forward? Kung wala, we shall proceed with indifference point. Okay? Indifference point. Before I discuss what indifference point is, I would like to talk about the cost structure. The cost structure is how a company uses a mix of variable cost and fixed costs. A mix of variable cost and fixed costs. We call that the cost structure. Okay. Cost structures can either be high variable cost, low fixed cost, or the other way around. Low yung variable costs, high yung fixed cost. I repeat, cost structure is how a company uses a mix of variable costs and fixed costs. Cost structures can either be high variable, low fixed costs, low variable, high fixed costs. The indifference point is the level of sales wherein when you compare two cost structures, they would give us the same profit. So, kung gagawa ka ng bagay, anong gusto mo marami? Marami kang tauhan or machine yung ginagamit mo? Kung marami kang tauhan, marami kang variable cost, direct labor. Mas marami yung variable cost. Kung konti lang yung tao mo, mas maraming machine, tataas yung factory overhead mo. There will be an increase in the fixed cost, fixed factory overhead. So when you do an item, there are many possible ways to do it. You can either use more labor, increasing your variable costs, decreasing fixed costs, or you may use more machines, higher fixed costs with low variable costs. Now, the issue here is at what level of sales will those two cost structures give the same pantay na profit? Okay? The indifference point is the level of sales we're in, the operating income of cost structure A. Y is for income. Y is for income. The operating income of cost structure A is equal to the operating income of cost structure B. Okay? Yung income under sa high variable, low fixed cost, magiging pantay sa income ng low variable, high fixed cost. Ulitin ko, cost structure is the mixture of variable and fixed cost. What's the relative proportion? May mga pagkakataon, pwede kang mag-operate ng mas maraming tauhan, ibig sabihin, mataas yung variable cost mo. Labor kasi yan. Or, konti lang tauhan, mas maraming machine. Mataas yung fixed cost mo. Okay? I want you to answer the following question. This is for the indifference point. I want you to answer this question. And I will give you 3 minutes. I will give you 3 minutes. The following data relate to guitar company which sells a single product. Ito yung original na given. The firm salesmen would like to change their compensation from a 15% commission. Gusto nilang babaan 5% commission pero meron silang sahod plus 100,000 per month fixed salary. Presently, the salesman receive commission only. So originally, mataas yung variable cost ng company. Yung variable cost ng company, 15%. Sorry, meron pang 20 pesos dito. Tapos 15% yung commission sa 50. 50 times 15%. The salesmen, they are willing to reduce their commission to 5%, but they are going to demand a salary of 100,000 per month. Presently, wala silang sahod. At what sales volume in units? At what sales volume in units will the two compensation plans be indifferent? In other words, magiging pantay yung profit nila. I'll give you 2 more minutes. Okay na? Sorry, George. Ngayon ko lang nabasa. Ano yung problem? Yes, George? May concern ka?
Sir, hanggang 4 lang po ata tayo.
Ay, 4 na?
Opo.
Sorry. Ha?
That's
Wait
okay
lang.
po.
Are you sure, 4?
Yes po, sir.
Anong class niya after?
After po?
Meron ba? Wala.
Wala naman na po.
Ang sabi sa akin, 1 to 5 eh. Are you sure, 4?
Yes, yun po yung nakalagay po sa pledge form po namin, sir.
Okay wait lang. May contact kayo kay Dean?
Sa Facebook po.
Sige wait lang. Sige. Sorry for that, no? Sorry for that. So, tapusin ko na lang to, no? Kung wala naman kayo next class, I'll just finish this and then we're going to continue next meeting. Magbibigay lang ako ng isang 30-minute video na panoorin nyo in your free time. The following data relate to guitar company which sells a single product. Price is 50. Purchase cost per unit 20. Sales commission is 15% of 50, 750. Monthly fixed cost is 450,000 pesos. The firm salesman would like to change their compensation from a 15% commission to 5% plus 100,000 per month fixed salary. Presently, the salesman receives commission only. At what sales volume in units will the two compensation plans be indifferent? Okay? Sales revenue minus total variable cost minus total fixed cost is equal to operating profit. PCM minus CFC is equal to OP. PCM is equal to PFC plus OP. And there you go. How do you arrive at the total contribution margin? You may do so by multiplying UCM times U. UCM times the number of units sold. Okay? So UCM times U is equivalent to the total contribution margin. Before versus after, we should make sure that they will provide us with the same profit figure. Tatapusin ko lang to ha. UCM original times the number of units minus the total fixed cost original. This should be equal to UCM of the new one, the new compensation plan, times the number of units minus the total fixed cost times a total fixed cost of the new compensation package. UCM ng original, 50 minus 20 minus 750. May 20 na purchase cost, 750 na commission. This is 2250 times U minus 450,000. Sa bagong compensation plan, yung commission, 5% lang. 5% of 50 is 250. 5% of 50 is 250. 50 minus the purchase cost of 20 minus commissions of 250 times the number of units minus 550,000. There you go. No? That would be 550,000 because there's a compensation of 100,000. No? Meron tayong compensation, meron tayong sahod sa mga salesperson na 100,000. So, kung gagawin nyo itong equation na to, ipagsama nyo yung 450 tsaka 550, that will give you, by the way, simplify muna. 50 minus 2750 is 2250. 50 minus 2250 is 2750. So 2250 ito 2750. 2250U minus 450K, 2750U times 550K. Ipagsama natin si 550 tsaka 450, 100,000. 2750 minus 2250, that's 5U, equals 200K. The number of units to be sold that would give you, the number of units to be sold that will give you the same profit, equal yung profit ni original tsaka bagong compensation package, 20,000 units. Very good, nakuha ni Julia. 20,000 units. Okay? So, if hanggang 4 p.m. lang tayo, meron lang akong i-assign na kailangan nyong panoorin. You need to watch this video. This video is about the operating and financial leverage. Okay? This is still connected with CVP analysis, operating leverage. Okay? So in your free time, I have already sent you the video. I've already sent you the link to the video. And by the way, that's my channel. By the way, that's my channel as well. I've sent you the link to my video. For our asynchronous classes, we're going to rely on this. So I would like you to watch this video in your free time. Okay? Watch this video in your free time to to have a quick recap of what the operating leverage is. So apologies for the time. Akala ko hanggang 5 p.m. Okay? Sige. So thank you for listening. 1 to 4 lang pala, no? 1 to 4 lang pala tayo. And enjoy the rest of your day.
Thank you po, sir.